Hi, everyone. Welcome back to the Thinking Crypto channel. I have a special guest with me, William Quigley, who's the co-founder of Wax, GoCoin, Tether, and Magnetic. William, it's a pleasure to be speaking with you today.
Yeah, I'm glad to be here.
William, there's so many things I want to ask you about NFTs and Wax and all the great things you guys are doing there. But let's start with your background. Where are you from? Where did you grow up?
I grew up in the Bay Area in California, and then pretty much traveled all over the world, as part of my time at Arthur Andersen and then the Walt Disney Company, and then as a venture capitalist for many years. And then as I've been incubating companies, many of those have been in other parts of the world.
Yeah, absolutely. You are certainly have your tentacles in many different things. So I wonder if you can give us a timeline with, what comes first? Is it Wax? There was a time where you're at Tether and then Magnetic. Can you give us your time and evolution in the crypto industry?
Yeah, so briefly, I'll first start with how I got into virtual items. So that was in the late 90s. I had made some investments in, at the time, what I would have called magic internet money. These were little tokens that companies issued that were there to hopefully solve the problem of micropayments. And for people who don't know a lot about the payments industry, there is a reason why micropayments, say sub even like $2, are very hard to do using traditional infrastructure. Those little internet money for micropayment companies, they failed mainly because of things any blockchain person would know. No one knew how much they were printing, and that was the biggest issue. So flash forward a little bit, I was working with some people. I was on the board of, at the time, the largest video game virtual item marketplace. And so my partner had invented the concept of trading video game virtual items for money. And he started that in the late 90s with a video game, at the time, a big one. It was called Ultima Online. And they were one of the first video game companies to allow people to trade between accounts their virtual items. And my partner thought, wow, what if I could let people sell those to each other? And it was a great idea. I built it up to be the largest such marketplace. He sold that in 2009. I got off the board. And he almost immediately started reading on Satoshi Nakamoto's white paper, got excited about it, told me a little about it. I didn't have much interest. To me, all investors have scar tissue from prior things they've done. To me, this internet money thing was probably not a good idea. He was persistent. About a year and a half or so of persistence later, I said, all right, just give me your pitch. You got a couple hours, let's hear it. And then he explained the elements of the blockchain and all this. And I had actually worked with things, they weren't called blockchains, but they were basically blockchains. In the 80s, as an auditor for banks, we would take hash totals of hourly, daily, weekly, monthly, yearly, let's say deposit transactions, and we would get those totals, hash them, so that when we came back later, we just had to look at the hashes, and we wouldn't have to worry about refooting everything. So, but of course, the genius of the Bitcoin blockchain was the inventor matched a token in order to make it decentralized against the blockchain concept. So once I got that, I was like, wow, that's a big deal. And of course, when you first hear about the elements of a blockchain, how they work, why they're important, it takes, I would say, a couple of years probably to really process the significance of a blockchain. You don't just hear about it and immediately apply it. And so first we started mining, and then we got into the whole ASIC part of mining. I wish I had thought of that idea myself. It was a very smart idea, and in fact, even intuitive and obvious. But I didn't realize I had done 4 semiconductor deals in my venture capital career. I did not realize how fast you could design, fabricate, and punch out chips if you didn't give a damn about the fact that they might catch fire. It doesn't matter at all. You can get these things very fast in a couple of months. So we, I think, have done an extraordinary job, my partner and me, over the last 9 years in appreciating what at any given time the primary elements of value in the crypto space are, and in investing or creating things that go after that, and then in thinking about much more long term what might be possible when certain technical developments happen. I really think we've done an amazing job of that. So, we of course invented the concept of the stable coin.
Mm-hmm.
Once we figured out why we were having problems on what at the time were called alt exchanges. These were exchanges at the time. That term was for exchanges that had no fiat intake or removal. There were a lot of them, and it created a big pressing problem. And that was really the genesis for coming up with the tokenization of a dollar. I can add, by the way, that even among crypto people, when we first proposed it and talked about it, everyone had the same reaction. That's a terrible idea. It doesn't make sense. I understood their line of reasoning, but they didn't understand tokenization. But their line of reasoning was dollars have been digitized for 50 years. All you're doing is digitizing a dollar in another way. How would that be beneficial and needed?
Mm-hmm.
That's why I do explain the difference between tokenization and digitization, and eventually people got it. Along the way, by the way, in 2015, we became reacquainted with video game virtual items, but this time they were skins. And I'd been busy. I hadn't been playing games, and I sort of missed the first couple of years of skins. And for your audience, the difference between a video game virtual item and a skin is this. A video game virtual item is something that provides utility to the player in the game. A skin is a strictly cosmetic item. It adds no advantage or capability to the gameplay. It's just a cosmetic feature. And for various reasons, which probably won't go into, when we saw skins, it was evident to us immediately that the market for skins was going to be order of magnitude bigger than the market for video game virtual items. And we set about to build a marketplace, a second marketplace for skins. And along the way, I suddenly realized, wait a minute, I'm a venture capitalist. We always do competitive analysis. Maybe somebody's built one that's better. And that turned out to be the case. So we ultimately acquired a company that had done a fantastic job called OpSkins. And OpSkins was already the leader, growing remarkably fast month over month, and was really well designed. And it was, as we were fiddling around with OpSkins, we also realized this stuff should be decentralized. Eventually we're going to have color coins. If your audience remembers those, these were the precursor to NFTs. So we loved them, and we thought, wow, if we could use color coins and skins, it would be remarkable. And then along came some smart guy at Ethereum who said, what if we, had unique tokens on Ethereum? And when we saw that, we thought we need to be prepared to take our skin expertise and put it on a blockchain. And that precipitated the creation and the ICO of Wax, which was the first blockchain that was built for NFTs. Initially, we used Ethereum to do it. We knew we had been the second largest investor in the Ethereum crowd sale. We had actually helped start the very first attempt to put a smart, intelligent layer on a blockchain that was called Mastercoin. The Mastercoin team got upset because they couldn't work well with the Bitcoin people who didn't like intelligent layers for some reason. And so they left and started Ethereum, and we became a large investor in Ethereum. And so we understood Ethereum, we liked Ethereum, but we knew it couldn't scale. And but there was nothing else out there. And then Dan Larimer created the delegated proof of stake consensus mechanism, which we thought would be a really nice way to do consumer mass market trading and creating of NFTs. And so when he released that in 2018, we adopted that. And, things have been going very well since.
Wow, William, you're certainly one of the godfathers of the crypto market. I mean, the stable coins and obviously being a huge influence in NFTs and obviously having Wax now as this decentralized marketplace. So what makes Wax different from other NFT marketplaces, and what are the other things that you are selling on that marketplace?
Sure. So first, a marketplace is one puny aspect of NFT industry. Mm-hmm. So we knew from the get-go, this has to be an entire ecosystem, which is why we created a blockchain. If you were, I personally think marketplaces will become totally commoditized, but that's for a different discussion. We had been in the virtual item trading industry for 20 years. Mm. And many skins are unique. So they're fully transferable, they're unique, they're immutable. Once you have them, you have them. They look and feel a lot like an NFT or even a basic crypto, which is why it's actually shocking to me that almost no one in the blockchain industry, at least up until like 2017, played video games. I mean, they kind of look like people who play video games, but they knew nothing. And when I was doing the road show for Wax, and I was up on a stage and I would talk about, skins and how we're going to port those over to the blockchain, and everybody's looking at me blank faces. And I'm like, you guys know what a skin is? Anyone play video games? You know what CSGO is? Team Fortress 2? I don't know. Since they didn't, that became real work. And, I guess it kind of always humors me when I know something is going to be enormous and I can kind of line it up and see. I'd also, by the way, in the mid 90s, my partners and I started the very first consumer internet venture capital fund, a fund focused just on consumer internet. And I can tell you when we did that, mainly what people said was internet is a fad, and you wouldn't even want to dedicate a fund to the internet space because it's small and probably never going to develop into a viable industry. But you guys are going one slice narrower. You're taking consumer internet. And I had worked at Disney for many years, so I was a consumer guy. And I said, because this is going to be a remarkable platform for consumer applications. Same thing happened with us in Wax initially. I would say the average crypto person was utterly clueless. Hmm. They couldn't see why NFTs would be significant. And I think most of them thought of NFTs as putting unique pieces of artwork on an Ethereum blockchain, right. Which I thought that was kind of interesting, but not interesting enough for me to do what we're doing. I considered NFTs to be a new entertainment media. I
Mm.
considered it, it would be equal to music and movies and video games, but bigger than all of them for a whole bunch of reasons. And I must say it was hard to communicate that at the time. And so I'd even say up until 2 months ago, maybe January 2021, a very, very small number of people in crypto thought that NFTs were interesting, and virtually no one outside of the crypto space did. So it is remarkable what's happened in 2 months. Only maybe a sociologist could tell me why it happened and everything blew up. But we have been thinking deeply about NFTs and about what they can do for 6 years now.
Wow.
We have designed lots and lots and lots of IP, a lot of which has not been released. But suffice to say, it will be a major part of the blockchain space. And if you go back to some probably YouTube videos in 2017 when I was doing Wax, you'll see me there saying NFTs and virtual items are going to be the on-ramp for consumer adoption. Yes, more people will be using stablecoins as a cash substitute, but they won't embrace that and get excited about it. But they're really going to get excited about this stuff. And now I'd say, heck, there was a Saturday Night Live skit last week about NFTs, so it's hit the pop culture.
Yeah, absolutely. It seems to be getting to that tipping point of mass adoption. I'm seeing just random people messaging me now asking about NFTs and how they can use it. And hey, you're the crypto guy, right? Tell me about NFTs. So I'm curious what type of demand you're seeing on your end as far as the type of NFTs. And I'm assuming you've seen a surge in activity as well.
Yeah. And as I was saying, when we built a marketplace, we built a marketplace that could scale, right? That didn't have gas fees. We also created an NFT standard. I think many people missed that point, that you can only innovate in a given technology as far as the technology allows for it. Therefore, the standard is incredibly important. Obviously, we created the Wax Cloud Wallet, which I think even today has no equal. Cloud-based, permission-based wallet that we can, as Wax, do a lot of functions on behalf of the user if they give us permission. Most of them do, or you can just take over the thing completely. And then, of course, so far we've had a number, a couple of dozen marketplaces pop up, and so we also, as Wax, we go out to big brands, and we have, we've signed up many, many, many global brands. And when we talk to them, I think they go, wow, you guys know what you're doing. And also you have to remember brands, you're a big consumer product company. You might have put billions of dollars into your intellectual property. Yeah. It's very scary to hand that over to someone and talking about blockchain or some other technology. So I think it's helped that me and my colleagues who come from Disney, I was the CFO of the licensing group for Disney consumer products many years ago, but having had the experience of helping to manage the world's largest consumer products licensor, with, at the time I was there, 15,000 licensees. That gives a lot of comfort to the brands we're talking to. We're good stewards of brands. We understand that there's lots of problems with managing your brand's representation, particularly once it becomes digital. Mm-hmm. And so I think they get it. And then, of course, at the end of the day, we invented the concept of a pack opening, right? We did that with the the most popular pack opening collecting concept ever, which was the Topps trading cards wax packs. It's by coincidence that we're wax.
Right.
The term wax pack's been around a long time, but we created that for Topps. Everybody loved this concept. Open up the pack. Of course, the ability to buy a pack for $5 and get 5 NFTs. You could not obviously do that on Ethereum because you would pay $20 in fees for the $5 pack, and pay $20 every time you transfer the $1 NFT. So again, we were thinking a long time ago about consumer mass market and adoption, and it's going well. Since I'm from the movie industry, obviously we've signed up a lot of studios.
Mhm.
I like movies. We did Godzilla versus King Kong NFT drop, Wednesday? I think it was Wednesday. Sold out a couple 100,000 NFTs. I think it was 3 minutes or 4 minutes. Everything we sell sells out. And it's nice because you don't have to worry about the fees, and you can use fiat because a lot of people do want to use fiat. And so I say, Wax has designed a platform that's really attractive to global brands and understands consumer behavior. And that's probably why it's successful.
Yeah, absolutely. Because a major pain point to what you mentioned is the Ethereum gas fees. Like personally, I wanted to create an NFT, but I don't want to give up a ton of ETH and put that much money into the gas fees. It's just ridiculous. So I'm glad to hear that you guys are seeing that success. And yeah, browsing your website, I saw the partnerships and the folks in the advisory boards, Capcom, Topps, Marvel, Google. So you've got some large names here connected with you. So I'm certainly excited to try your platform.
Yeah, you should. It's fun. It's like uh, when my friends who are my age, over the age of 20, when we did Garbage Pail Kids, right? A lot of them were Garbage Pail Kid card collectors, and some of them were like, "Damn it, William, this stuff's addictive." And it really is, opening up these packs, because you don't know what you're going to get, just like in a traditional pack. And when we did a promotion, I think maybe 1 month ago, using another new technology in the NFT space we invented, where we linked the physical and non-physical. So we had Topps trading cards, physical packs in Walmart and Target.
Mhm.
And if you went to Walmart and Target and you got those packs, you opened them up, there was a QR code, you scanned the QR code, and then you had 5 of those now digital NFTs automatically in a Wax Cloud wallet. And people love that. In fact, we saw a lot of people sending us pictures of them ripping up the physical cards because
Yeah.
they didn't want them. They just wanted the digital. And who knows, if people ripped up enough of the physical cards, those physical cards will actually be worth something, right? It's the physical version of burning.
It's interesting because, to your point, we're headed to that digital economy, token economy. Crypto is a big part of it. NFTs are going to be a big part of it. So where do you see the NFT space maybe in 3 years? You see, to your point, more people going for the digital goods versus the actual paper.
Yes, I do. And I've collected lots of stuff in my life, but I'm a lot more mobile than I used to be. And used to be like hunkered down, and communication networks weren't as good and all that. But now I'm super mobile. I'm always traveling, and so the notion of having a lot of physical possessions has gone way down. I think that's even more pronounced for people 20 years younger than me.
Sure.
Frankly, if I were a physical art collector, gallery owner, if I was in that business, I would be worried,
Yeah.
because I think we will see a increasing and rapidly growing amount of interest in digital formats for high-end collectibles. And that means if you have the physical could wind up just being like, well, anyone who used to buy grandfather clocks, there was a time when those were in everyone's house and they look great. And now literally you cannot give them away. I think a lot of this physical art is going to be the same. And if for your audience, anyone who's ever like gone to someone's house and seen the video monitors, mounted around, a lot of my friends have that, and they're just putting up NFT art. It's so much more visually stimulating and engaging than physical art. So I think that's where we're headed. There'll be less and less people interested. I mean, if I have to forecast it out, I would think maybe we've experienced peak value of the traditional collectible physical art and the ascent of digital.
What do you think about the current valuations of some NFTs? We saw Beeple and some artwork go for millions of dollars. Some saying, it's a little overextended, but also there's a momentum here. Do you think it's going to even out eventually? Obviously, there's going to be perceived value of things, but what are your thoughts on these high valuations?
I've got a lot of thoughts. I won't have time to express them all here, but for over 20 years, me and my partner's expertise and education has been in the secondary market of virtual items. And I think we have become, we were great, curious students of what drives value, what drives trading, what drives collecting, when the tides turn on this stuff. And it's an exercise in one part technology, and that as that evolves, and then one part psychology. And all secondary markets, whether physical or digital, rest on one common foundation, and that is confidence. Without confidence from the buyers, the traders in that market, there is very little liquidity. And there are a lot of things behind the scene people don't even probably recognize that are happen sometimes organically through the powers of Adam Smith, and sometimes very deliberately to increase confidence or maintain confidence. I would not have a whole lot of confidence in the secondary market for a lot of these NFTs, these Ethereum-based NFTs, issued by people who often, it seems, are just looking to make a quick buck and don't have a philosophy. It's like buying a one-off piece of art from a guy who maybe drew something really nice versus someone who has a whole theory and an expectation that they are going to be refining their craft over their lifetime. It's a very, very different thing. So I would say, and for like the $60 million or even $6 million or $1 million pieces of NFT art, I would say that is rampant speculation, and who knows. Now, having been in the virtual item space for a couple of decades, I can say that a lot of people would say to me over the years, why would anyone pay $50,000 for a CSGO skin, maybe a certain type of rifle that everybody likes, the dragon lore in CSGO. They're like, it's just a little digital object. And I'm like, yeah, well, but there's a very healthy market for that. And it's rare and it's cool. And there's a lot of social validation that comes with walking around with that dragon lore rifle with a couple of Cologne tournament stickers attached. So I'm the last one to say, oh, these are not worth anything. In fact, it's funny, at one point in 2017, when I was describing skins to crypto people, they said, but these are just digital things not backed by anything. How could they ever have any value? which I found quite ironic coming from the crypto crowd. Uh, and so I guess, I look at the NFT art and I'm like, based on the principles of secondary markets that I know, I'd be suspect of a lot of this. But, if you've got a bunch of Ethereum that you bought at 30 cents in the crowd sale, have fun.
Right. Yeah. No, you bring up a great point. And, personally, growing up and collecting trading cards, I had Marvel cards, I had baseball, basketball cards. So I would trust the value or the inherent value in the secondary market from something from Topps or Marvel. Now, some random guy, I don't know.
But you know what? You bring up a point I want to emphasize there. You trust it because it came from Topps and Marvel.
Right.
So when we put Topps on wax, one of the first I collected a lot of their cards over the years, but I also understand because of my time at places like Disney that when you are a brand with a storied heritage and a truly like solid amount of confidence from a lot of people that you do the right thing and you're thinking about this constantly, right? And you're going to be around. That is incredibly important. If you were just to take and make a bunch of trading cards, right? It's one of the reasons why I was sort of surprised pleasantly by what happened with NBA Top Shots, because they just made some cards, right? They tried to become basically what Topps is, right? And for various reasons, people just lobbed onto them and bought them. But there's risk there, right? It's like something created by a brand that's been around for decades versus something just created. It might be cool and it might stand the test of time and it might not. So there's a little bit more risk in those types of things.
Sure, that totally makes sense. So I'm curious as far as if let's say someone is listening to this podcast or watching the YouTube video, and they're like, I'm going to go try wax. What would be the next step? And can you quickly give us a high level overview of walking through the process of signing up and getting your own NFT listed and all of that good stuff?
Yeah, well, if you're a buyer of an NFT, so probably just go to wax.io, get a wallet. It's cloud-based. It's really simple. No private key or public key if you don't want. You create an account with your social logons, your Google email, your Facebook, PayPal, whatever. Now you got a Wax Cloud wallet. In that wallet, you will see a lot of different things, one of which is upcoming NFT drops that we're doing. There's many people using and issuing on the Wax blockchain that's not Wax itself. I initially thought, and I know I was right, when we first started to issue NFTs, which was in 2018, initially all the people who came to us especially when we were using a copy of the Ethereum chain, it was all the people we had brought from Opskins and virtual item trading for video games, and so they didn't know anything about crypto. They're what I call no coiners. They just didn't know and they didn't care. So we knew we had to have a wallet that was super intuitive to them.
Sure.
I think it's super easy to trade with us because we were always in the business of trading virtual items, and so anyone could probably very easily go get the wallet, set up the account, and then MetaMask is a nightmare compared, to the Wax Cloud wallet. And then you look at the next upcoming drop. In the primary sales, we typically allow people to use fiat or in the normal world that your credit card, and we do that because most people are not comfortable trying to get out a Ledger wallet or go and buy some crypto somewhere and then try to pay with it. They're just not. You can, if you want, bring some Ethereum and swap it on Wax, swap it for Wax if you want. But if you just want to use your credit card initially, you can do it. I mean, I've had my sister and a lot of people who are not traditional video game players and maybe definitely not crypto people come and they just do it and it's easy as pie. I would only say, be patient because like when we did the Godzilla drop, it sold out in about 3 minutes.
Yeah.
So you may not get it. Now, there's a good secondary market. You can go on one of the secondary markets on Wax, and you can buy, a pack, an unopened pack, or you can buy the opened NFT cards if you want to. It's really simple to trade in the Wax Cloud wallet. It's just like you have your card and it says, sell it. You can just transfer it to a marketplace and sell it, or go on a marketplace and just say buy it and pay for it. I think if you have a PayPal account, or you've ever sent someone an emoji on your iPhone, that's probably about the level you would need. It's not hard. Now, if you own Wax tokens and you want to do stuff, I don't know if this is still true, but it was true about a month ago. We were the only NFT blockchain that you could actually receive some of the network fees that are being collected.
Oh, wow.
For NFT buying and selling on the marketplaces. You could collect that as an owner of the NFT and get a very good return on it. So there might be a few others who have done it, but when I said we created an ecosystem, like I said, it's the blockchain, it's a cloud wallet, it's a bridge into Ethereum. It's marketplaces, and that bridge into Ethereum is because we also launched a few months ago a decentralized finance liquidity pool on Ethereum for Wax holders. So if you want to actually own Wax and then participate in the network and the returns accruing to that network, you can swap your Wax tokens for Ethereum version of Wax tokens and stake them, and get every 2 weeks a distribution of some of those returns. So it's a cool, very comprehensive system. If you're an IP issuer, there's no place better, because we thought through, I think, everything important, including, as I said, the NFT standard. So you can do a lot of cool stuff you can't do other places. We also have a series of smart contracts. And, remember, I was a CFO for a licensing organization. So royalty accounting and distribution, I know how to do that. So if you're an IP owner, we have in these smart contracts what I call author fees. You could think of them as intellectual property owner fees. And so as you're trading back and forth, something that these IP owners love, they've never been able to participate in secondary markets. Right. And now they can not only participate, but as the guy counting all the money and looking at all the invoices at Disney, one of the things that was annoying and difficult was, how do you know that these licensees are paying you your appropriate share of the royalties? There's no way to know unless you audit them. You can't audit 15,000 companies, so you have to spot audit them. And let me say, virtually always they shorted Disney. And so I've said to all these big brands and IP owners, there is no such thing as an audit because none is needed. And then I explain how the blockchain works. It's a ledger. And there can't be a transaction without a record of that transaction having occurred. And that transaction has to go through this smart contract. And every time it does, you're getting a piece of that transaction. So wow. They love it. The accounting people love it. They're like, wow, there's this. I'm like, yeah. And it's not like you wait 3 months or 6 months to get that royalty check. Or if you're a voiceover actor, you'll wait a year. You can literally see the transactions right as they're happening. And if you wanted to, you could take them out every day. That is really exciting to an IP owner, because there's nothing else like it.
Right, it's pretty revolutionary. And do you see like the music industry start to adopt NFTs more, and obviously we get the arts and collectibles? What do you think might be the next big surge, maybe from the music industry?
What will be the next big thing in the music industry?
Or I should say, as far as adoption, I should say, of NFTs, because it seems right now it's just a lot of digital art, but music might be the next
I
cycle.
think the next big thing is going to be virals.
Mm.
Those are, it's the word is a combination of virtual, so V,
Mhm.
plus IRL. IRL in text speech is in real life. So we created viral NFTs, virtual in real life NFTs, in 2017. The very first viral we created was a sneaker. So it was a NFT linked to a collectible sneaker. That sneaker traded 224 times in the first 24 hours. And that's how I knew this was going to be a giant, giant thing. Can't explain in this short period of time all of the benefits of tokenizing consumer products, but I can tell you that every consumer product on earth, maybe in the next 5 years or 10 years, will be an NFT.
Wow.
That's everyone on earth. And that's why the art is interesting. Collectibles is interesting. This is a new format for the transmission, the ownership, the trading of global consumer products.
Wow. And I have to ask, I know there's probably a lot under NDA and waiting for, PR, the press releases and things along those lines, but any hints as to what we can potentially expect from Wax later this year?
Lots of name brand companies doing lots of innovative things with NFTs. We did announce one, I think yesterday. I think it was yesterday. Yeah, it was like April Fool's Day. Yeah, and so we announced a partnership with Fundco. Fundco is, I think they're the largest creator of collectible figurines, right? Billion plus revenue company. And we are viraling those figurines. So you will buy an NFT linked to a specific collectible figurine, and there'll be many, many, many other consumer product companies that we're doing deals with. So yeah, there's a lot of cool stuff coming. Obviously, a giant catalyst for another jump in what is possible with NFTs, but also the size of the market will be augmented reality NFTs.
Yeah.
Right? That will be a substantial category within the NFT sector. We're working on a lot of that stuff. It is the vision, I hope, is that we are not locked into the model that guys like me never saw coming in the mid 90s. When we thought about the internet, we thought it's going to be a bunch of, there's going to be hundreds of millions or billions of sites, and it's going to be peer-to-peer, and the intermediaries will be gone, and it's going to be fantastic. And how did it turn out? The opposite. There are 10 global platform companies on the internet that essentially control access to the internet, how you monetize, how you trade and buy and sell. Sure. I mean, it is shocking how this turned out. And I think most people who aren't the owners of those 10 giant corporations would probably say, we kind of wish it didn't turn out this way. And so sometimes people say to me, why are you still doing this stuff? Why don't you go hang out like at a beach or whatever? And a big part of that is because I don't want what blockchain is going to be doing, call it Web 3.0. I don't want Web 3.0 to be a carbon copy of what happened with Web 1 and 2.0. We cannot let these gatekeepers who now are incredibly restrictive. They have business models that Wall Street loves, and also Wall Street refuses to let them modify. And as a result, they respond to the worst impulses of capitalism, and creating greater and greater restrictions on what people can do, which is anathema to the blockchain industry, where we have permissionless innovation. And we believe that, anybody, big or small, should be able to compete on a level playing field. And that reality, I think, is where we need to go to.
Sure.
And I'm trying to do my small part to make that happen. And if you see what's going on in the music industry, it's really exciting. The music industry has been held captive by a few companies that extract most of the value. And I think there's a reason artists and record labels are like, wow, this is a lot fairer system. A little more complicated, a little wonky right now and difficult to use, but there's a lot of willpower to go this direction and not go where we wound up today on the internet.
Yeah, absolutely. And I appreciate, your fervor behind that, and helping to your point, building a better internet, less centralized, I would imagine, and more peer-to-peer. So I want to switch gears a bit and ask you about the crypto market and Bitcoin, and get your thoughts on it. Obviously, we are in a bull market. Bitcoin has rallied to 60,000 and it's getting adoption. We got Tesla putting on a balance sheet, accepting it as payments. We got hedge funds here. We got JP Morgan, Goldman Sachs, all these folks. What are your thoughts on how the market has grown and where it will continue to grow?
I will say surprise for what happened in Q1 with Bitcoin. I am a student of Bitcoin and the daily ups and downs of Bitcoin for 9 years. And I had grown comfortable with the historical patterns repeating themselves with Bitcoin. And those historical patterns broke in Q1 of 2021. In Q4 of 2020, we had massive growth in Bitcoin. I think went up about 200%, which is great. Now, Q1 has historically been the worst quarter for Bitcoin. The majority, 5 of the last 7 years or so, Q1 has been a losing quarter for Bitcoin. And historically, Bitcoin had never gone up 100% or more in a given quarter, and followed that with a positive quarter at all.
Sure.
So I saw Bitcoin in Q4 going up 200%. Lots of people jumping into it, a lot of Wall Streeters championing it. There was a lot of, in the US, election concerns and uncertainty. COVID stimulus was worrying people. So all of these factors had, I think, driven the price of Bitcoin up, plus, of course, the halvening in May 2020. And so I thought we were going to see post the halvening, maybe for another 18 months, right? So the end of 2021, we would see a nice increase. But I actually didn't think much would happen in Q1. I thought people would pull back a little and whatnot. Instead, it went up 100%, which really surprised me. Having said that, my belief right now is that Bitcoin will be somewhere between, call it 100 and 150,000 in 2021. Now, if you look at the exchange traded options market for Bitcoin, you see a lot more bullishness than that. I mean, there are call options being sold for the end of 2021 at strike prices of over $200, $300, $400,000.
Wow.
I am not that exuberant,
Right.
but it does show there is a massive, group of people who think this is great. I wonder when the mainstream investors and even some crypto people, frankly, are going to understand that one of their premises for Bitcoin is just fatally flawed and silly. And that is the original purpose of Bitcoin as a money substitute for mass market payments. No way, no how. I know that because I've been doing payments for a long time. I was the first institutional investor in PayPal. I used payments in all of my marketplaces, dozens of different payment platforms. I totally get the payment space. The reason my partners and I created Tether was because we knew the advantages of tokenizing currency, and we also knew the disadvantages of tokens that move in price. That sort of volatility does not work as a payment. And I think what I'm saying has been borne out. How much are people using Bitcoin as a payment? It's great for a cross-border, very large dollar amount settlement. We use it for that. It's amazing. Because, if you're doing a $200,000 or $1 million cross-border payment, the benefits of getting it there with certainty, with no chargeback risk, quickly, right? No other way to move money in under a day on Earth other than with crypto or carrying a suitcase across a border. So that's really cool, but that's not consumer mass market. And these people who think that, they just don't understand. Like crypto payments globally are going to turn to blockchain-based payments, but they're all going to be central bank digital currencies. I wish it was going to be Tether. Tether trades trillion annually, but it's going to be trumped by the 20 largest economies of the world that within 5 to 10 years are all using stable coins. And there's no way you would need or want Bitcoin as a payment. And if the audience is saying, what about Lightning Network, which is a capability on Bitcoin? I mean, when people bring up Lightning to me, I say, are you freaking joking? I mean, have you ever used Lightning? It's a joke. I mean, just stop. It's silly. So no one's going to use it. It's going to be stable coins. I am highly confident. I'm highly confident because that's what I'm going to be using.
Sure. But do you, so certainly to your point, it's kind of gotten away from the vision of the payments and currency, but it's more of a store of value. What do you think about that? How that has evolved?
Wonderful. And every day I'm reminded of why it's so wonderful. People in the United States, their views are so distorted by how things work in the United States. I think this is one of the reasons why a lot of people in the US didn't understand Bitcoin initially, including Michael Saylor, thought it was a scam or a joke and didn't make any sense. If you don't think deeply about this stuff, it won't make sense. When people would say, well, I'm never going to use Bitcoin to buy a Subway sandwich, I would say, I hope you don't. Yeah. I don't either. I still like Bitcoin. I still think it's going to work really well, and it doesn't matter. And then they would wonder why. So as a store of value, its main benefits, because a lot of people will say, well, is it a store of value? It's volatile. It's volatile hour by hour, day by day, even week by week. But it is extraordinarily unvolatile. And by volatile, by the way, I mean up and down. When people say volatility, you need to understand, and they say it is a bad thing, they don't really mean what they're saying, because no one minds movement going up, right? The price going up, people don't call that volatility. They call that appreciation, but it's movement, right? Volatility, they don't like it going down, right? Well, if you look at Bitcoin over the last 10 years, in 8 of the last 10 years, Bitcoin has gone up in value in 8 of the last 10 years. Compare that to gold, to global stocks ex-US, to commodities, to bonds. compared to every other major traded asset, Bitcoin does phenomenally better. In fact, the only asset that's done better, a major traded asset, is U.S. equities, which I think has gone down 1 year in the last 10 years. Bitcoin's only gone down twice. So from that perspective, it's not so volatile. You just don't look at it day by day. And as a store of value, the ability to bypass intermediaries and banks. I mean, if I do a lot of international stuff, currency conversion is a scourge that a lot of people in the US don't think about because we only think about dollars. But there is $1 trillion annually that is taken by financial institutions and FX houses globally for our $80 trillion global economy. I mean, currency conversion is a tax on every cross-border transaction on Earth. The ability to pay somebody in a tokenized currency that never gets converted.
Right.
You know, that was one of the things that I just loved about Tether. Anyone can hold dollars. Your audience may not know that if you're not in the United States, for all intents and purposes, you can't hold dollars. People are going to say, no, I know a guy, he's got a business. Yeah, try, if you're in China, try to have a dollar denominated bank account. And if you're in the US, try to have an RMB or yen denominated bank account. You can't. The amount of effort and money that it takes to do that is way more than most people can spend. But you might want to hold euros or yen or RMB. You can do that now through tokenization. And I think every portfolio should hold Bitcoin and should hold even some of the other altcoins. If you like a given sector, whether it's NFTs or it's stable coins, you should hold some of those. And now, of course, all the major investment banks and financial institutions have said, wait a minute, now that they've all gone up to 2 trillion in market cap, we want our customers to have some of this too. It took them a long time, but it certainly bodes well for the long-term health of the crypto space.
Sure. So I want to ask, I'm assuming you hold Bitcoin, you have Wax tokens. Anything else you're holding in your portfolio?
Probably numbers and over 100 tokens. We were the second largest buyer in the Ethereum crowd sale. We hold a lot of Ethereum. We hold probably, I don't know, almost every token in the top 50.
Wow.
We've been buying and holding, altcoins since 2011.
Wow.
So we a lot of them wound up being worthless. Whatever, there's a rule. My team calls it the Quigly Rule. Once you buy a coin, no matter what, when you decide to sell it, retain a percentage. I say retain 30%. You might retain 10 or 20, but something like that. And the reason is, for guys like us who have done this a long time, you went to the trouble to research that thing, to find out about it, to buy it, to hold it. These coins sometimes percolate for a long time before their potential really becomes obvious and the token blossoms. You don't want to just say, I'm out of this because today it doesn't look like it's going anywhere. And there are more examples of this than we could ever count. So I won't bother saying them, but pretty much every token on Earth, right? So just hold some stub piece. Trust me, it could wind up, that stub piece could be worth multiples of the 90% you sold 2 years ago.
Wow. So I want to ask you about Tether, being one of the co-founders, and you left, I believe, in 2015, and things have progressed since. And obviously there's been lawsuits and quite a few things happening. What are your thoughts on the whole situation and what needs to happen here with Tether?
Tether is a remarkable invention. As I said, we invented the first stable coin. It is the most traded crypto on Earth.
Mm-hmm.
And every one of the major economic powers on earth are copying us. So, that feels very good. We were right. Um, could Tether have like done better? Could it be more transparent? Yeah. I would just say though, when people poke holes at Tether, first, you try getting bank accounts in 2014 as for anything crypto related, let alone tokenizing dollars. You try that. Yeah, good damn luck. We were smart, we were ahead of our time, and we were aware of how useful this is to all consumers. But banks were hostile to crypto, and they were hostile to anything they didn't understand. And so, you go with the banks you can, and some of them weren't so great. And one of those banks that Tether put money into was seized. I think that was the genesis of the lawsuit, the cynical lawsuit filed against it in New York, saying, "Hey, your stablecoin isn't fully backed by currency." It was, but the stupid bank was seized by governments. So what? Second, Tether fixed that problem. It fixed it in a creative way. It issued another token, got $1 billion to replace 800 million that had been taken. All is good. And what I always say to people who still can't get over the fact something doesn't have to be backed by a physical thing to be worth something. Look at the US dollar. But I say, you have all these complaints about Tether. What does Tether trade at? Between 99.5 cents and 101 cents. A hell of a lot better than the conversion deltas between the US and the euro or any other currency. So what I would say is, you might not like Tether, but even in its darkest times where people weren't getting the information, and I support the fact that they should be more transparent, you could always exchange that thing for damn near a dollar,
Right.
a tiny little bit less or more. So as an experiment and a first time product that has not changed almost in any way, yeah, I'll say fine. You want to criticize it? Let me see your product that you launched 7 years ago has had virtually no modifications, and are people using it? That's what I would say.
And I think
It's
a
easy
lot
to
of
criticize.
yeah, and I think a lot of people who criticize Tether, it's almost aimed at people who are anti-Bitcoin. They just want to poke holes in Bitcoin and say, well, hey, Tether is manipulated and this is happening to pump Bitcoin. And even though the
Yeah,
settlement is there, and Tether just recently came out with their showing their reserves and proof of that.
yeah. And it's very easy to be a critic. I've been building things since, I don't know, 1995. It's very easy to be a critic, right? And it's kind of lazy usually. There are enormous innovations now around stablecoins. The algorithmically stabilized coins are quite interesting to me. No linkage directly to a physical token or a physical currency. So yeah, that's all I'd say about Tether. I mean, yeah, if you don't like it, use a different one, or heck, go try to use dollars. I mean, do what you want. I use it. I love it. The businesses and very intelligent, smart investors who I work with love it. So, you don't like it, it's a free country. You don't have to hold it.
For sure. I do want to get your thoughts here as we wrap it up. Obviously, a big lawsuit with the SEC against Ripple regarding XRP. And I think depending on how this goes, the determination will affect the rest of the market. The SEC is planning to review every project, so to speak. What are your thoughts on this? And do you think the SEC needs to revamp its Howey test and treating digital assets differently?
I wish they would revamp that test. That to your audience is a test from the 1940s court case that determined very simplistically how to distinguish between maybe a simple contract between parties or a security. And there are very, very troubling aspects of applying something that in no way anticipated some new innovation, applying an old precept against it. I think if the SEC's initial movement into the crypto space, I think came about when there was a lot of scammers during 2017. And that is inevitable. We saw the same thing during the internet bubble. A lot of scammers came in. I think most of those people have been identified and removed. And I also think if you're anybody in a regulatory capacity and you are looking at the extraordinary developments and innovations that the blockchain community is putting forth, I mean, look what Wax is doing for the retail industry, for the music industry, for old brands that are trying to revive products. It's like, hey, if you want the world to be dominated by Tencent and Alibaba and Google and Facebook and Apple and Amazon, then don't let any innovation happen. And get all those guys, by the way, would love the blockchain to disappear.
Right.
The blockchain is about permissionless innovation for people who have been blocked from doing it and just destroyed by a lot of these big companies. So I do know that the SEC has multiple mandates, and one, of course, has to do with making and preserving the United States as a place where capital can be deployed in productive ways, where innovation thrives. And so I think the SEC has, in many ways, had a light touch here. They've identified some projects that they think did something wrong. I'm not here to judge if they did or they didn't. And I think their move on XRP surprised me, because I thought XRP was doing useful things with major banks. And let's remember, we know very little, right? We're not part of the SEC. We're not working at Ripple. Who knows what is really driving all of this? My hope is that there's some sort of resolution that preserves XRP's ability to continue operating, and that does not hamstring all the other blockchain projects with restrictions that are so onerous, it just prevents us from competing against these entrenched players. Yeah, that's my hope.
Yeah, absolutely. So William, as we wrap it up here, I want to jump to rapid fire questions, such as what's your favorite food?
Probably Rocky Road ice cream.
Good one. Favorite musician or band?
Oh, I'm going to date myself. It's between AC/DC and maybe Journey.
I mean, two legendary bands, can't go wrong. I listen to AC/DC and Journey. It's part of my playlist. So
maybe Def Leppard in there too.
Oh yeah, of course. Favorite movie?
Last of the Mohicans.
Awesome. Favorite book?
How Democracies Perish.
And when you're not working at Wax or doing anything crypto related, what are you doing for fun as a hobby?
Scuba diving.
Very nice. Well, William, pleasure chatting with you. I've learned so much today and very excited to try out Wax and get part of the NFT ecosystem. Thank you so much for everything you're doing, and we'd love to have you back on in the future.
That's amazing. Thank you. It's been fun.